Finally, 2026 at our gates. As the saying goes, a new year, a new beginning. Hopefully it's going to be a bright year for you guys, especially financially, but not as bright as the sun to my back because that's at a burning state. And that was exactly what happened to silver. It was burnt to fall more than 16% of its all-time value in few days only. And that was due to CME Group posting a new margin rules, which are higher than previously. We have made a video about that. Make sure to go check it out if you're interested to know more about it. Regarding stocks, as usual, year ends don't bring as much activity to stocks because a lot of big investors, hedge funds, banks are taking days off because of the new year, Christmas holidays, etc., etc. But personally, I see the highlight of what happened is Warren Buffett resigning. And that's about it. Let's see what happened on charts. All right, guys, looking at NASDAQ, exactly as we had anticipated and analyzed in the previous week, market moved bearishly, hitting the trend line. Now, true, we do have a very bearish Maribuzo, like multiple big I love you candles happened in the past about, or on rather say, NASDAQ. So true, it is big and red, but those are mostly because of ETFs and option trading, future trading that's being placed for annual moves. And that's why they're executing, or rather say filling these orders and grabbing profit with it. And that's why you see big red candles. So these red candles do not necessarily reflect a bearish sentiment upon NASDAQ. So from here, we can expect NASDAQ to continue up, reaching to this resistance minimally, and possibly also break above it. So we'll see about that. We are expecting some very good 2026. Okay, let's not give you lies, guys. 2026 will have big surprises coming up, but I'm not gonna highlight those now. Let's keep this for when the time comes, especially on gold. There is like a big, massive scheme happening on a table in closed rooms, and I wasn't there if you guys are wondering. But things are to happen. Stay updated. Make sure to watch every other video we post because I'm gonna be speaking about these little by little forward. So that's about NASDAQ, still at the kickstart of the year, so don't expect so much to just hop, drop, and get markets to burn right away. And that's about NASDAQ. Let's go into gold. All right, guys, looking at gold, it had maintained some of what it is worth at the beginning of the year. So we have a Superman pattern here, which is not a technical pattern, by the way, but that's what it's forming. So we can't really rely on what's going on as in pattern formation. So we do have a support and resistance here. We can expect a consolidation, and there is a little bit possibility that we might see gold going a little bit further down, possibly making for us maybe a descending channel here, or actually could form an ascending triangle. So it's still not clear where it might form, but there's a little bit of bearish sentiment upon the movements because of the candles we are having. There is actually a decent possibility if gold behaves as a good boy, or as it should, technically, we could see it maybe forming a ascending triangle, retracing to this resistance before a movement to the downside. So many possibilities on gold. Be careful trading it because gold, most of the time when it consolidates, just hunts to blow up every other trader's account, speaking about those who trade with leverage or small amounts. So that's about gold. Let's go into Nifty 50. Looking at Nifty 50, finally, Nifty 50 has decided to actually make some action, exactly as we've been highlighting for the past, I don't remember what, maybe a month and a half, a month, something. Finally, it started moving up. Now it's at all-time resistance. There are good signs that it can break out from here, but there is a little possibility that we might see it coming back to the trend line a little bit more before it breaks out, and that's our anticipation. Well, the way I see it, it might just break out right now. The Indian market is starting with optimism with 2026, and so should you, right? It's a new year. Why would you want to be anything rather than positive, pessimistic? No, definitely not. All right, that's about Nifty 50. Let's go into Bitcoin. By the way, if you're looking to long Nifty 50, either ways you want your stop loss at the same place. So don't put your stop loss under here, put it under this low, or if you want even a better stop loss, could be below the support itself. Of course, not financial advising, just a recommendation to, let's say, in-house members, not even to you guys who are watching, so we don't get legally followed and pursued or prosecuted because of it. Anyways, that's about Nifty 50. Let's jump into Bitcoin. Looking at Bitcoin, the beautiful digital asset is still consolidating, as clear as we can see. There have been some spike ups and downs within this consolidation and a little bit of nothing, to be honest. However, right now it's forming somewhat of a cup and handle. We could see a retracement to this support rather than the lower support, which both of them are weak supports and can easily be sniffed out. Wouldn't actually say broken because they're that weak of levels. Before a continuation to the upside, which is this higher resistance, as we have been anticipating for a couple of weeks, more than that, I think, so far. So that's about Bitcoin. We still have that slight bullish sentiment above it. That's about Bitcoin. How many times will I have to say that statement? Let's go into what else do we have remaining? Euro USD. Looking at Euro USD, as I had highlighted in the previous week, it did fall to the trend line. However, we anticipated a continuation in this uptrend, but Euro USD, it broke below it. This actually was due to a fundamental reason, because of the same reason I highlighted at the beginning of the video, which are ETFs, option contracts, and future contracts being fulfilled. There was necessity for the dollar, and we had about $74 billion lended from the feds for all these hedge funds and banks and all these orders to be executed in a short story. And now you guys can have an idea what $74 billion can cause of a move on Euro USD among $7 trillion in average daily traded volume in the Forex market. Euro USD is the biggest one of them to be traded as a Forex pair. Still, it's a portion of Forex, it's not all of it. Yeah, but I'm going to be clear to you. We had some very good technical indications that it will break below the trend lines that for somewhat why I actually missed out on. So this is the uptrend we've been having. Let me give you a better line. So that's the uptrend we're having. We actually had solid, strong rejection here, and Euro USD came up to it and then found double engulfings. So we did have actually multiple technical reasons why Euro USD needs to break below this trend line, grab liquidity, which is exactly what it did. Now from here we see some strong bullish movement, of course, because it's support, but also that was sold down too. So there are two possibilities here. We can actually see Euro USD consolidating within this range before it makes a, let's say, clear is not a word, more clear direction. Or it could possibly push a little bit down to grab liquidity from all these, going to this support. And from here, we can see it going up. So multiple possibilities. You want to trade Euro USD, don't go into mid-term. This is on the 4 hours. Keep it day trading, I would recommend. Otherwise, 2026, just open the gates as I stated in the beginning of the video. We have a lot of possibilities now. Keep an eye on Nifty 50, NASDAQ, stocks in general, and keep an eye away from gold. Silver actually has some good opportunities right now, which I'm not going to highlight because you guys are not requesting that. And I've always been highlighting if you guys want to know about specific asset. Just type it down in the comment section. Not to lie, I'm not going to be looking at it myself. It's our team. But if they do, they're going to let me know and I'm going to analyze for you. So that's a win, not a win-win situation. You guys are winning. For me, it's not much, to be honest. I'm analyzing either ways. All right. That's about the technical part. I'm gonna hand over the mic to you, Mr. Median in London. Rather say, throw it from Burj Khalifa and hopefully it doesn't break by the time it reaches to you. So hopefully you get a good catch, like you catch that tennis ball, not tennis table. The tennis ball, if you remember, like 6-8 months ago, it was fun times. So yeah, let's hear it from your side.
Thank you, Samir, for sharing your insightful information about the technical analysis. Here is Amir Amidian, Master of Finance student in UK and also fundamental analyst at Xylostar. Let's dive into the financial markets as we got the Christmas, New Year and Boxing Day. Welcome back to another weekly market update. It's been around 1.5 years. We're continuously recording these information and updates regarding the financial markets for you. I hope you started 2026 in the best way and you enjoyed your holidays next to your family members. Let's dive into the financial markets with the aspect of fundamental. I want to kick this session with the FOMC. As you know, last week we got the Christmas and Boxing Day, so it was not a packed week. The Fed signaled a cautious data-dependent stance after its latest rate cut in December 2025, with policymakers divided on the pace of future easing. Inflation remains above the target, while softening labor market conditions justify gradual cuts in 2026 if disinflation continues. Overall tone points to measured easing in 2026, not an aggressive rate cut cycle. Let's go to the housing and real estate market in the United States. The pending home sales rose by 3.3% on the monthly and 2.6% on the annual basis, marking the strongest performance of 2025 and the best level as well since 2023. Gains were broad-based across all the regions. Improving affordability supported by lower mortgage rates, faster wage growth and higher inventory is boosting buying activity and signaling a gradual recovery in housing demand. Let's track also the labor market in the United States. Initial claims fell to 199,000, the lowest in weeks, signaling a continued labor market resilience. Insured unemployment held at 1.2%, while continuing claims declined, pointing to limited payoffs despite gradual cooling. Let's review the East as well. In China, PMI rose to 49.2 in November, signaling a slower contraction with most sub-indicators improving and output stabilizing at 50. However, margin pressure persists as input costs hit an 18-month high while ex-factory prices remain in contraction. Let's have a look for the upcoming week. Next week is gonna be a packed day as the first week of 2026. I mean the official one, which market participants are going to be back at their family offices, hedge funds, and also mutual funds. Let's dive into it. So the main concentration for the next week will be on the United States, as we are going to get the latest update about the labor market conditions such as NFP, ADP, and initial jobless claims as well. On the other hand, we are going to get the CPI numbers for the Australian dollar, and it will be super crucial because it's going to be reflected for the upcoming rate cut decisions by the Reserve Bank of Australia. And also we are going to get different numbers from the Canada, such as the unemployment rate and employment change, and at the end of the week we are going to get the consumer sentiment by the University of Michigan. Stay tuned with Xylostar. See you next week.
That'll be it, guys. Thank you for watching. I would have rather to have a longer vacation due to the holidays and the new year, but discipline is discipline. We need to give you this content every week. For you guys, we already have the information, so have some appreciation. Please hit that like button, share the video with somebody you think that might be interested to know what's going on in the world. And yeah, we'll see you in a next one.